US dollar in there from Jamal. But let's get into it. How risky is shorting a market, my friend? Talked about this a little bit with Mikey Butler yesterday. I want to flesh it out even further with you, my good friend here today. And the way I let it off with him, and I want to ask you, is at any given moment, you, Jamal, active trader in options, futures, stock, everything, how much of your portfolio is short at any given moment? Like, a lot of people think of short. Remember, people used to think of being short as being like unpatriotic or something like that. Very strange. But for active traders, day-to-day traders, hour-to-hour, minute-to-minute traders, I mean, I would say my portfolio can be 20 to even 50% short when I look at all my positions. What say you?
And by shorting, you mean just directionally, right? Like short deltas.
Yeah.
Right? Yeah, I think it can be probably, for me, it's probably anywhere from 15 to 20%. I'm kind of the person who likes to find, I like to find things when they're on their down slope. I do. I mean, I generally kind of look at, this is overdone. And then and if it's something that I'm getting short, it's usually like it's so extended, like kind of like you said about oil last week, the 90s, even though I didn't partake in that because I actually do feel like oil is going to go in a straight line to 100, but that's a different story. I would say 15 to 20%.
Yeah. And honestly, I think consciously or subconsciously, part of the reason why even us, some of the most active market participants you can be out there from the retail side, part of it is the fact that I'm much more likely to buy something that's beat up. Say there's a stock, look at Peloton, right? Peloton gets its butt whipped. And I can buy it for whatever the hell it's trading at. It's gone from maybe $100 down to 20. Oh, I can buy it and I lose $20 if this thing goes to zero. And most stocks don't go to zero. They get bought out or something happens before they go to zero because they have, their worth and their equipment and everything else. But selling something and looking here at the naked short call and SPY, that theoretical infinite risk with quite literally the infinity sign here is a little scary and maybe kind of throws you even subconsciously, right?
Yeah, it does. By the way, what does negative infinity mean again? Doesn't that mean something? I forgot. It's been so long since I took a advanced math class.
No, I don't know what the heck it means. Is that like a band name? It could be a band, negative infinity. I don't know. The only thing that does mean to me, though, and this is a lot of number crunching I did, Jamal, but I found that no market has actually reached infinity to the upside. Did you know that?
You sure about that?
you ever seen a market? You type in AAPL, bid infinity minus a penny, offer infinity.
What did the tulip market get to in 1786 or whatever? Didn't get to infinity? Yeah, that's true. No, you're right. Okay, yes. Infinity. For the sake of discussion, no market has gotten to infinity. But I think we should start a quest to find out what market has ever gotten to infinity. I think we should.
Well, I mean, and a lot of the people on Reddit forums and everything trying to take some of these markets to infinity, right? To try to squeeze some of the
super advanced classes in math. Didn't you have some type of discussion one day in class about what is infinity?
That is a funny thing. I think a lot of people like to think it is like goodwill. I studied mathematics at University of Michigan, and a lot of people, I got to let you know, but a lot of people do. Whenever they hear that, like, oh, Frank studied math, like, were you sitting there with like Robin Williams and Matt Damon and just like saying like negative infinity? What does that look like? And it's like, no, it's not nearly as fun as that. Either way, no markets are reaching infinity. You're not reaching a negative infinite loss, but we can create realistic measures of risk for shorting a market. And especially in futures. In stocks, it's a little more difficult, right? Because most of the margins or buying powers you get in stock or options positions are static at like 100% or 50%, or I think a lot of options positions are like 25% of the underlying market. Margins in futures really let you know what they think that market is going to do by expiration. So trading SMO from the long or short side, I can measure risk, Jamal, and like, oh, if I sell SMO, that negative infinity is more like negative 1650, right?
Yeah, more like 1650, or maybe you have a number in your head of like, there's possibility I could wake up one morning and be down 2x, like just from some random circumstance.
Yeah, like crude oil is a great example because it's like, all right, market is 90. If I sell it, crude oil has historically, I think the high of as long as there's been crude futures, it's like 118 or something around there. And so like if I sell the 90s, then like realistically, infinity looks like 110 to 120 in crude. And with the small crude oil futures, that's a couple $1,000s. With the big ones, that's going to be, 10 times as much here. And with that, you rarely actually reach that amount. You can look here at the chart with the margin of $1,600. That would be in a monthly fashion, because we have monthly futures here, a $16 move in crude. And I did some research both on our stock markets and on our crude markets. And I think it's been legitimately less than 1 or 2% of the time that your actual P&L in a short position reached your futures margin, which, I mean, how many times have you seen, and I don't knock on wood, because I don't want this to happen to anyone, but have you seen a long or short position reach that buying power that you put up in loss?
Not yet. Not that I can think of, no.
That's a pretty bad day if you're seeing that. So I mean,